there, have you really considered going into shares? Today, in our video, we are going on a 10-point adventure on how to get started with investment in shares. This is Friday Money Matters, and I'm your host, Kenneth Perry. Thank you for joining in. If you're coming in for the first time, please do subscribe, like, share the videos, and send it to your friends and everyone whom you are interested in building up financially. Now, let's jump straight into it. Investing in shares is one of those things that a lot of people are overlooking. There are so many types of investment, and investing in shares is one of those investments that can grow your money over a period of time. Now, in our video today, we are focusing on 10 things that you should do as you embark on this adventure investing in shares. All right, be mindful that I'm calling it an adventure because investing, just like any other activity that you do, you must have a passion for it. You must enjoy the ride. And if you don't enjoy it, you will certainly get fatigued. And if you're fatigued, the process will be a daunting process. And as such, you might find yourself pulling out of the process and leaving out big chunks of money that you would have made if you had stayed the course. Number one, which is the first thing that you must do on this journey, is do your homework. Now, you need to find out exactly the layout of the stock market, find out about industries, about companies that are performing well, find out exactly how it functions, who to talk to. If you need to talk to someone, if you need to talk to a broker, find out exactly what it is. Do a conclusive research on all the ins and outs concerning the stock market and trading in shares. The second step on this journey is have a budget, conduct budgeting. Now, it is important, therefore, to know exactly how much money you are going to invest in shares. Now, when investing, please, the advice is always begin with an amount and always invest something that you are comfortable losing. All right, we know that we've always heard the saying, the greater the risk, the higher the reward, or the higher the return. But it does not make sense to always risk without a proper strategy. Therefore, the most important thing that you ought to do as far as risk taking is concerned is to invest or set out a budget for an amount that you are willing to lose, that will not have that much of an impact on you emotionally or otherwise if you were to lose it. Now, I'm saying this because the risk is real. There are always chances that you might lose everything. Therefore, it has to be something that you're comfortable losing. Number three is choose your stocks. Choose your stocks. Now, it's like choosing a dream team. Always when you're choosing stocks, you're choosing those that are winners. You're choosing something that you're passionate about, an industry that you know so well, an industry that makes you feel good, that you know how things are valued in that particular industry, an industry where you know what the trends are, what products are trending, and how valuable they are. This way, you make decisions that you can easily relate to and you're able to follow and understand. Therefore, your investment decisions are going to be based on knowledge that you already possess. Now, there is nothing that beats knowledge that you already possess, because now it's almost as organic. The decisions that you make will come as organic as possible, and therefore you're able to make decisions as quicker as possible in cases where maybe you need to increase the amount that you have invested, or you need to get out of a trade. It is easy to do that if you have prior knowledge, or if you have got in-depth knowledge about that particular industry, company, or share. Number four, the fourth step on the journey is diversify. Diversify. That's the rule of the game. You cannot, I repeat, you cannot put all your eggs in one basket. Now, you need to stretch out your investments, find out exactly which industries, which companies, or in a particular industry, which different companies are you investing in. If you're investing in tech, are you investing in food and beverage? Are you investing? So spread out your investment so that when one industry is not doing well, then the other will be able then to pick up and cover for all the other losses that you would have made, or the other gaps that you might have had in the market in those days that you would not have been trading. If one industry is not performing well, then it means that you're moving your equity and focusing only on those industries and companies that are performing well. So you need to diversify. Yes, diversify your equity over different companies, over different shareholdings, and have a more diversified portfolio. Then number 5, you now open a brokerage account. Now you see, all the other 4 steps that you did, you still did not have an account. Now you're opening an account. Now the account is a step that is very significant, because now you're saying you are getting ready to trade. Find a brokerage or a platform that you are aware of. Please, when you do this, make sure that you do an in-depth research of who they are, where their offices are, find out how long they've been in the market for, find out how easy it is to access your withdrawals in the case that you've made money. Find out if there are any other issues at all that other traders previously had with that platform or that brokerage. That is very significant, because this is your money going in, and you have to find a way of taking it out in the case that you want to withdraw or take out your money from that particular brokerage. So do in-depth research on your brokerage firm. Still here, please do remember, like, share the video, and subscribe if you have not yet subscribed. Now, going to number 6, once you have chosen a brokerage firm and opened an account, if there is, and there always is, an option to start with a demo account. Now, a demo account is where you've got electronic money that is not physical money, okay? It's just practice money that you make sure that you get familiar with the platform. You are now ironing out your trading strategy. You are trying to find out exactly how you're going to trade, put trading objectives. Yes, you need to have objectives, how you're going to trade, how you're going to exit from each trade, the reasons for entry. So you are trying out strategies until you find a winning strategy that you're going to implement when you start trading a live account. So always start with a demo account. Number 7, you are developing a plan. Develop a plan. Now, this is based on number 6. If you did number 6 well, then it will help you develop a trading plan in number 7. Now, a trading plan will involve things such as how much are you willing to risk. You need to know exactly your limitations in terms of risk. You need to have a plan exactly in terms of income to risk or to loss. Have a ratio that you stick to all the time. Now, a plan has to be written down, and the plan has to be followed religiously, no matter how much you're trading, no matter which instrument you're trading. As long as there is a plan, you know exactly what drives you to take up a trade and how you'll exit from each trade. So you have a very concrete, very specific trading plan, and it has to be followed religiously all the time without fail. This is going to be the decider on whether you're successful or not. This is what will keep you grounded in different seasons, in different times, in different market environments, in business cycles when they turn, in recessions, in prosperity. You need to know exactly your trading plan, and you stick to it without fail all the time. Number 8, then you start small. Start small. Now you're going live. You have a plan. Now you're going live. Start small. Start small and start building. You know, trading could be emotional at times. The smaller you start, the quicker you deal with certain emotions. There are emotions such as fear of loss. There are emotions such as greed. You are trying to manage your emotions and know exactly how you react to different variables in the market. So you ought to start small. Don't risk your entire equity my advice to you would be to risk at least a 1 to 10% of your equity in every trade, but do not exceed 10%, because now you're still building up. And the larger you build, then you can start maneuvering and changing how much you can risk at any given time. But I think 10% risk is always the best thing to do at any given time. And number 9, yes, number 9, keep your cool. You need to keep your cool. There are times where the market is already ahead of you. You want to jump into a trade because you had someone is killing it, is making it in this particular trade. Now your emotions are driving you. You are eager to make that cash. Please control your emotions. Money does not know any emotions. Money does not care whether you are happy, whether you are angry. Money remains money. If you go there with your emotions, you are going to be disappointed. I'm telling you, you will be disappointed. Manage your emotions all the time, because no emotions will ever justify any trade. Trading is a technical exercise. There are no emotions involved. I will repeat, trading is a technical exercise. Absolutely no emotions involved. And at number 10 is grow your portfolio gradually. Now, the only way to increase your stakeholding, the only way to increase your investment is if you grow. Remember, we are talking about investing. Investing always has a focus on returns. Now, the best way to make larger and larger returns with time is, now that you've got everything to the T in terms of your trading plan and everything else that you're implementing in your shares trading, you ought to grow your portfolio. This will make you rich. I tell you, it will make you rich. But I will repeat and emphasize this. 1, no emotions involved. Either greed, either fear, no emotions involved. Number 2, stick to your strategy, stick to your entry and exit plan. You must know exactly why you're entering, why you're exiting. And number 3, always manage your risk. Do not invest money that will make you cry when you lose it. Always invest something that you are comfortable losing. Therefore, if you've got a small amount of money, always invest even smaller. If you are willing to grow, it takes time. You will need to be patient, and with time, we'll start seeing those returns coming in, because you're becoming more and more comfortable with your trading plan. Now, remember, Friday Money Matters. Every Friday, always invite your friends, like, share the videos, subscribe. If you have not yet subscribed, this is where lives will begin to change. Let's grow financially. We'll see you next